I think every crypto investor needs to become immediately aware of this thing called CARF. CARF stands for the Crypto Asset Reporting Framework. It is a tax proposal that has come out of the OECD last year in 2024, and it is being adopted by most of the developed countries and countries that are trying to grow, including the US is actively looking at it. The White House has received a recommendation from the Treasury Department to sign up to make the US a participant in the CARF reporting framework. Now, what is CARF? What's being reported? What is this framework? Well, you may have heard of the 1099 DA that the IRS is using to force every US exchange to report at the end of the year to the IRS all the trades that a trader has had, both exchanges, cash outs, as well as transfers in and out of the crypto exchange. And the IRS gets that information. Now, here's what's interesting. They get it for US taxpayers. They also get that information for people who are not identified as US taxpayers. 1099s are being issued for both parties to the IRS. And this is just from US crypto exchanges. Well, CARF takes this global. It's a global reporting framework where each country in the world is doing the exact same thing. In fact, the entire 1099 DA is a CARF implementation ready to flip the switch once President Trump signs the authorization. This CARF reporting framework would then have foreigners who are doing transactions in the US would then have their country of tax identification, where their tax residents would then be informed of all the same information that's coming on a 1099 DA. Vice versa, in foreign countries, the IRS will receive from those foreign exchanges the same sort of transaction level detail about US taxpayers transacting overseas. Wow, this gets the IRS a massive view of your overseas trading activity. And here's the key. With CARF, those reports are not given to you. If you get a 1099, you get a copy of it right in the mail beginning of February. But with CARF reporting, you're not going to get a copy of it. You don't know what is being disclosed to the tax authorities unless you pull it off the exchange directly and they disclose it. So this is very concerning because then this becomes information which the IRS will use to see if you're reporting all your crypto trading activity on your tax return. Why is this important? It's becoming really hard to hide. CARF reporting starts in 2027 for the trades that you make in 2026 in most of the initial signatories. Some countries will start in following years, but suffice to say, everything in Europe and all the major crypto exchanges, everything happening in 2026 on will be reported. The IRS in a year will start to have phenomenal view. Now, one of the bigger concerns people have is that this reporting framework, both the 1099 DA and the CARF, also report your transfer to and from wallet addresses. This information, when it's received by the IRS, can allow them to get a partial but a view of all the different wallets that you use. Then, in exploring those, they can then see what other wallets you're connected to and start to create a bigger picture of your portfolio. As they did in the Roger Ver case, they can go back and reconstruct the size of your portfolio and the amount of trades that you did in prior years to see if your tax returns in prior years were complete. Well, the bottom line is it's becoming very, very tough now to hide from the IRS your crypto income. We know that about 75% of crypto traders aren't reporting their crypto income to the IRS. Well, now's the time to come clean, get current, and start reporting everything. Because if you don't report it all, the IRS will find you and they will hit you with penalties, including possibly fraud penalties, which could steal from you all the gains that you've made because you failed to report to the IRS. It's better to pay your taxes than to be caught in the past. The penalties and the interest trying to catch up to past reporting failures could just wipe you out. If you have a situation like that, give our office a call at CryptoTaxAudit and talk to us about how we can start to move you into a compliant basis.